All right, we're rolling. Hey guys, welcome back and thanks for tuning in. Let's talk about Bitcoin. So let's get right down into it. Now, we had a pullback, and that should have been of no surprise to those who've been following this channel because indeed we're sitting at an area where Bitcoin is greatly overbought. This area here, okay, on top of this macro rising wedge. And on top of it all, there's been a lot of positive news sentiment. Look, everyone's anticipating the approval of the Bitcoin ETFs. That in itself is a gigantic bearish signal, y'all. Simply because of herd mentality. Listen, you're going to hear it straight up on this channel. There is such a thing. You have to understand market psychology, herd mentality, where good news, any kind of good news, any kind of speculative, good, optimistic news, there's an entity called the market maker. And the market maker is banking on doing the opposite of herd mentality. So if everything looks like it's going to moon, you could be sure that the market makers are shorting it, are going to short it, and vice versa. And so you remember when Elon Musk, when all that talk about Elon Musk was going to do an appearance on Saturday Night Live, and everyone was buying Dogecoin, and I told everyone in my group it's going to tank, it's going to just crash, it's going to dump, furiously dump, and sure enough, after Elon Musk made a Saturday Night Live appearance, Bitcoin just dumped, and no one could figure out why. Well, it makes perfect sense why. Good news is used as a catalyst, and bad news is used as a catalyst as well. We've been hearing a lot of good news recently surrounding Bitcoin and crypto in general. Remember last summer, everything was bad. Everything's a scam, everything's a Ponzi, blah, 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 blah. And what happened? Well, we had these massive rallies like we see right now. Look what happened to Solana. Everyone's talking about Solana was going to die. Solana was dead. Bitcoin, nothing was going to ever recuperate. And not only has it recuperated almost 200% since it bottomed out in 2022. And so that was based on bad news. That's why you buy the rumor, the bad rumor, and you sell the news, the good news. And so if you've been following this channel, all the good news surrounding the ETFs, and then you look at the technical analysis of where we sit, and we are sitting on top of a macro resistance on a gigantic rising wedge, on the 5 wave, no less. So I have here a bearish Wolfe wave. Those of you who aren't familiar with Wolfe waves are used primarily in wedges, in rising and falling wedges. We know that rising wedges are bearish and falling wedges are bullish. And what Wolfe wave analysis tries to do is it tries to predict where the price is projected to go and when it's projected to go there. And so since we're in a macro rising wedge, we're sitting on top of overbought Bitcoin on the resistance line. We could safely assume that at some point this price is going to fall back into structure. How far deep? Well, theory suggests that you draw a ray from the top of wave 1 and through wave 4. See, here's 1. 2 is the bounce on support. 3 comes back up to resistance. And then 4 comes back down. We sort of had the zigzag here, and it came back down to macro trend support. That's the 4 wave. And then 5 is this. See, just sort of like this in this picture here. The 5 wave is the longest. And then 3 and 4. So you draw the line from 1 through 4, straight line, it's extended out. And when the 5 wave distributes, wherever it distributes, and it's not going to be a straight line, obviously. It could go up here and mitigate this 48,000 liquidity void and then come down at some point like this. And it doesn't matter how how it gets there, but no matter where it is, when it crosses this line drawn from the 1 and the 4 wave and the Wolfe pattern, that is basically the area where it's projected to find some sort of semblance of support, where you begin to see demand reemerging. And so that would be a good place to take profit, those of you who are inclined to short. Anyway, we don't short in the United States, so, but it's just it's a good biased confirmation to have, the Wolfe wave on top of everything else. So I wanted to draw this out and show you that this is further confirmation of a imminent price drop. Also, we look down in the vertical bar volume, and we have clear descending demand. Now, there's a divergence. When demand is decreasing and the wave is going up, as in a rising wedge, that is also a bearish signal. It's a very strong bearish signal. There should be correlation if it is a legitimate, if the market makers, if the composite operators plan to pump it from here and actually not go back into structure, but buck the trend, so to speak, and pump it, then you would see correlation on the macro over these last months. This goes all the way back to January. When this wedge started, this January of 23, we would see a steady increase of demand volume over the macro time frame. But we're not seeing that. We're seeing the opposite, and we're seeing supply predominate. Really, I see supply spikes, volume bars predominating for the most part over demand. Where we see demand protruding is where the price action hit the macro trend support and it propels it back up, like in this Elliott wave here. Which brings us to point 5. Now, if we want to even there's also another bearish confirmation signal, but you have to go into the forensic time frame. And for that, let's go into the hour now. And just bear with me here. Now we're going to go into Wyckoff. Now this is the top. This is where we are. This is where we sit on top of macro trend resistance. Just going to remove this circle so we can see clearly. And I'm going to, let's see if this will work. It does. All right, this is a Wyckoff distribution schematic number 1. All right, and so we can compare the top with this. So we see just a quick cursory glance. We see the automatic rally here. This, of course, is the buying climax, this area here. Here's the secondary test. As you see it in here, this would be this. And then the sign of weakness in phase B would be here. These two being mitigated. And then we have a UT here. UT, of course, stands for upthrust. That would be here. Then it comes back down into the range, not quite to trading range support, but or it doesn't go quite as deep as the sign of weakness in phase B, and we saw that this did not go beyond the SOW here. And then this area here, we had this rally, and that would constitute the UTAD. UTAD, of course, stands for upthrust after distribution. So this is looking more and more and more conspicuously like a Wyckoff distribution range. And all of this jibes. It's like you have to do detective work. And when you got 3, if it looks like a duck, it sounds like a duck, it's probably a duck, right? So this is looking very, very, very much like a distribution, and we're fixing to fall back into the wedge. Okay, so let's go back out now. Now that we verified the Wyckoff, let's go back and do this here. This is the easiest way to just get rid of this stuff for me, because I like to mark all my stuff up here. Okay, and then this should take us back. Okay, and so we're back now. Also, something to consider is this liquidity void at 48,000. This is a very strong liquidity void. It's big. It's a macro void. So macro voids are usually what the market makers eye when they're marking up in these counter trend rising wedges. In this case, it's a broadening rising wedge. We see the spread expanding, getting wider as the price action climbs up this wedge. Eyeing this liquidity void. Now this would be a big bear order block right here. And so this tops out at 48,000. This is $48,000. So we could, if this turns out to not be a UTAD, what we just looked at in the Wyckoff, and instead it's just a sign of strength. It comes back up, and I wouldn't put it past the 48,000. Because what could be happening is the market makers could be enticing more retail to come in, and because Bitcoin is notorious for this. Bitcoin is very treacherous. It's very tricky to momentum trade Bitcoin in these situations, because very often it'll buck the trend, and the market makers will do contrary what retail is thinking, and some retail are savvy onto this, and they'll do contrary that, and so it'll be like a double, they'll set up their shorts, and lo and behold, institutional order flow will pump it. They'll accumulate more and pump it, and then liquidate all the shorts that retail set up. So you're screwed either way. And so, but above 48,000, 50,000, I would say that is the counter trend. That is most definitely the counter trend top, and then we could expect the price to fall back into the wedge, and then go even beyond macro trend support, flip it back to resistance, and then we start to see the downtrend back into the prior low region, which would be 25,000. That's where this Wolfe wave line, this target line, is drawn at $26,000 Bitcoin, and it could even go lower than that. Although we'll have to see. We'll have to look at the forensics when we get there. But all right, I wanted to share that with you guys. I hope you got something out of this. I try to give it to you straight up, no nonsense. If you appreciate this kind of technical analysis, I'd appreciate a thumbs up. Leave a comment. Subscription would be great. Make this stuff more prevalent. Get it more on the, like I like to say, the YouTube algorithm, so more traders can find this stuff and learn how to trade properly. Learn how to read volume and price action. And for those who really want to step up your trading skills, consider joining our Discord group. We have a private Discord trading group, and it's extremely affordable. It's $20 a month. And, you shouldn't have to spend thousands and thousands of dollars to learn Wyckoff and VSA. I know there's all these courses being offered, but it's not necessary, guys. You can learn this stuff. It just takes practice, dedication, pattern recognition, going over it and doing it. And that's all I do in this Discord, and I share my thoughts. And there's other traders in there. We bounce ideas off each other, and you just stay safe. It'll help you stay safe in the market. So consider doing that. It's, like I said, $20 a month, but even if you don't want to do that, it's fine. You could still profit greatly off these videos and off the charts that I upload to TradingView. Check out my charts when you get a chance. They're 80 to 85% win rates. And so anyway, I'm really optimistic about this year after the double bottom. See, this is going to come back down, and we're going to mitigate somewhere in the 20,000s, and that's going to be the macro double bottom that we look for. And then once the price comes down to this area here, they're going to dig in. Institutional guys are going to buy in preparation deeply for the bull reversals. And when the bull reversals come, you're going to know it, because we're going to bust right through this 46,000 point. When we come back up, we're going to come back down, retest it, and then from there is the sky's the limit. We're talking, we can go 70, 80, 90, $100,000 Bitcoin later, but that won't be till later this year, perhaps in the fall. Coincidentally, around election time, because they're going to boost the economy. I believe they're going to print money, and they're going to boost the economy, and they're going to make it look like it was all sunshine and roses, and for the sitting administration, so that in the hopes that they get reelected, because look what they did. And then Bitcoin and stocks, the stock market, Bitcoin and the crypto markets, everything will reflect that, and so that also will coincide. Everything is falling into place. So just between now and then, don't be a liquidity provider for these market makers. Don't buy the tops of these structures. Be smart, be safe. Subscribe to this channel. I'll try to keep you as safe as I can, and we'll take it from there. All right, guys. We'll talk to you later, and have a great day. Happy and safe trading. Bye-bye. Adios.